Hey everyone, Levi here, and in this video I'm going to answer the question why I don't invest in VFV, the ETF, and specifically highlight the kind of comparison between VOO, VOO, and then VFV, kind of that Canadian equivalent. So yeah, if you're kind of working on your portfolio and you like to buy and hold ETFs, and you're kind of wondering on the differences between the two, especially for a Canadian investor, this is going to be a really good video and answers a lot of questions that I see a lot and even just wonder myself. So yeah, if you're keen to learn about this, stick around. A little bit of a mix up from the usual SEO content, but seems like relevant info. So want to get into it. To kind of kick off and quickly explain the difference, VFV is a Canadian ETF that tracks the S&P 500, but it trades on the Canadian stock exchange and specifically trades in Canadian dollars. So it makes it a really attractive option for Canadian investors because, again, they don't need to trade and buy something on a US exchange in US dollars. So again, it seems like an attractive option, but VFV has hidden costs and some tax inefficiencies. On the other hand, VOO or VOO is probably going to be the better choice for a lot of you, mainly due to lower fees and better tax treatment, but we'll get into it and sort of explain when you might want to invest in each. So again, what are these two ETFs, VFV and VOO? They are both just index. They're both ETFs that just track the S&P 500 index, so they're index funds. S&P 500, if you don't know, is basically 500 of the biggest major U.S. companies, and is a really common way to kind of get exposure to the U.S. stock market and kind of one of the most popular indexes for just kind of long-term investing. Again, like I mentioned, VFV trades on the TSX in Canadian dollars, whereas VOO or VOO trades on the New York Stock Exchange in US dollars. So the kind of really big thing here is if you are buying this as a Canadian, you need to buy VOO in US dollars. If you just load money into Questrade or Wealthsimple, you just put Canadian dollars in. Those brokers are going to switch that money into USD for you and probably charge about 2.5% currency conversion along the way, which is extremely bad. And then when you sell, most likely it's going to come back. So a big consideration there is if you're able to switch money kind of at that spot rate and skip that conversion. Where VFV, you can just buy it right away. So that's a slight little benefit a lot of people view VFV having. And that's one of the reasons it's become so popular in Canada. People choose it to avoid currency conversions. Now, kind of getting to the drawbacks is right now it seems like a great option. Just buy VFV, don't buy VOO, keep your money in Canadian dollars, and skip that whole headache of either paying a lot of money to Wealthsimple to switch money or fussing around with Norbert's Gambit or however else you convert money. But a big thing here is VFV is just a wrapper of VOO. It doesn't directly own S&P 500 stocks. It just holds VOO. So it doesn't have, 2% Apple, 1.9% Nvidia, 1.4% Tesla, or whatever the current distribution within the S&P 500 is. It just buys VOO. This creates an extra layer of fees because the VOO management expense ratio, MER, is passed on to VFV, and then VFV also charges its own fees. So again, it creates a whole extra layer of fees. But if you hold VOO, you avoid those costs, specifically the MER. So again, VOO MER is 0.03%, which is insanely low. My math is correct. You have $10,000 invested. That's $30 a year. VFV's is 0.09, which is 3 times higher. And that obviously really adds up over time, especially if you have large amounts of money invested, 6-7 figures, which is kind of the goal for most people when they're holding these things over the course of decades. Another really big consideration is how the withholding taxes work on US dividends. US dividends in a Canadian listed ETF like VFV are taxed 15% by the US government withholding tax. But if you buy VOO in an RRSP, you avoid that tax. If you are buying it in a TFSA or non-registered account, you don't avoid that. But VFV's dividend yield is lower due to this tax because it doesn't come to you. So that's a big consideration. Now, if you're buying VFV in a non-registered account, the benefit is going to be, or the disadvantage will be smaller because you're paying that withholding tax either way. But if you're investing in RRSP, like most of us are, you are going to really tilt towards wanting to have VOO. Another thing that's important, and another reason why I don't buy VFV, is the impact on dividend ETFs. Tax inefficiencies are even worse for high dividend US ETFs. So holding the US version directly can result in higher after-tax returns, which is what we care about because we do have to pay taxes. Again, little aside, kind of mentioned this already. When might VFV make sense? If you're not investing in an RSP and you want simplicity, VFV is going to be more convenient. So let's say you have, say you just have a TFSA, that's the only thing you're using, or you're only using an FHSA, and you're on, like, say, Wealthsimple, you can't really convert money efficiently, currency conversion, then maybe you'll want to buy VFV. But again, that currency conversion is going to be such a big thing. If you do have a question, you can use Norbitz, and again, that's going to kind of lean you back towards wanting to use VOO. But again, currency conversion is going to be a massive drain on your returns for VOO if you can't do that properly. So again, it kind of depends on your kind of competency level. The last thing, big consideration, is currency hedging doesn't matter. The way VFV works is, while you buy in Canadian dollars, it's still based on the USD returns. So you basically are still getting direct exposure to the US dollar. Lately, what's happened is the US dollar has been appreciating against CAD. So VFV's been going up faster than VOO, but that's because the USD is gaining. So there's no currency hedging at all. It's an unhedged ETF. So that part doesn't really matter. You are still getting exposure to USD. If the USD tanks, VOO's bad, VFV's bad. It doesn't matter, even though VFV you buy it in CAD. So anyways, final thoughts, which one should you choose? With an RRSP and a good Forex strategy, VOO is better. Lower cost and avoids withholding tax. Without an RRSP, or if you value simplicity, VFV is more acceptable, but it's going to be more expensive long term. So anyways, that's kind of my thoughts on VOO versus VFV, why I personally hold VOO. As you guys know, I use Questrade. So again, I use Norbert's Gambit. Check out my videos on that if you're interested. But hopefully this kind of puts it in perspective, the differences between VOO and VFV and what you might want to choose. So if you found this video interesting and helpful, make sure you like, comment, and subscribe. It really helps the channel. If you have any questions, leave those down below as well. And we'll see everyone in the next video.